Hi, this is Rich Checkan, President of Asset Strategies International, and I am here at the Money Show 2022. It's May. We're in Las Vegas at the Bally's Convention Center, and we have many good friends, none as wonderful as this gentleman right here, my good friend Keith Fitz-Gerald. And I was wandering the hall, and who did I bump into but Adrian Day of Adrian Day Asset Management. After a wonderful panel, I was able to track down one of my very good friends, somebody I've got a lot of respect for, my bro, Jim Woods. And look who I found walking the floor, actually after a very interesting and informative panel. I've got Brien Lundin here, the producer of the New Orleans Investment Conference and the editor of Gold Newsletter. Does the Federal Reserve, have any credibility right now?
And you want me to keep a straight face after asking
I
that,
would like
right?
you to, but whatever, go with the flow. But do they have credibility, and do you think they can tame inflation?
Okay, so let's tackle that one by one. First and foremost, I think that the notion that the Fed has any credibility whatsoever is completely flawed. I can't imagine they know how to spell credibility, let alone have any at this point.
I think that the Jay Powell-led Fed has more credibility than past Feds because I think I think Powell genuinely wants to thread the needle. The problem with the Fed, though, is it's got a task that's almost impossible to achieve. They're trying to keep employment at full employment, and they're also trying to keep inflation under control. Both of those things are very difficult. Even if you had the powers of a deity, it's too hard to know. There's too many moving parts.
I think they have what it takes to tame inflation. As far as the credibility, that's whatever the market receives at any point in time. I think that right now they have credibility. I think they're about to lose it in a big way because the task ahead of them is essentially impossible. They cannot raise rates high enough to forestall inflation or tame inflation.
Yeah, clearly the Fed has some credibility somewhere with some people because you have to just look at the way markets respond to their words. But why they have credibility, I have absolutely no idea. The Federal Reserve, in my view, well, the Federal Reserve all the way back to 1913 has failed disastrously in its own stated objectives. But if we just look at the last 10 years, I mean, they have, or 15 years, they have consistently failed to meet their projections. They have consistently got the economy wrong. You know, every year they come out with their predictions on GDP, and where interest rates are going to be, and where inflation's going to be. Considering that they actually control the short-term rate of interest, you'd think that their prediction ability would be a little bit better than it is.
Given all that, where do you put us right now? Are we in a recession? Are we in stagflation? Or are we slipping into a deeper depression?
Yeah, I'm not so sure about the depression because I think they're going to come in more waves of liquidity if we get to that point. Recession, we've already had 1 quarter of negative growth. All you need are 2 quarters for a technical recession. So I don't know where so many analysts are out there on CNBC and like predicting that we might have a recession in 2023. You know, we've already had 1 quarter. This quarter isn't looking so hot, so we could be in a recession at this very moment. So if you combine recession with inflation, yeah, I think we're in what some, and I would term technical stagflation.
I suspect that we're heading towards a stagflation period.
You know, that's a very tough call because many of the economic indicators that are used to measure those things are, in my opinion, hopelessly outdated. So are we in a recession or not? Don't know. What I do know is that 70-80% of the S&P 500 is reported as we sit here. We have a tremendous number of companies still reporting good data, growth year over year. Things are still going in the right direction. So the underlying economic picture, in my opinion, is stronger than the data implies. So the notion of a recession is very real. But will we get there? Are we technically in it? I would argue we're not, because chaos inevitably creates opportunity.
We are not technically in a recession yet. We've just had the 1 quarter of negative GDP growth. We may get another quarter of negative GDP growth, which would be a technical definition of recession. but it feels like a recession because we're getting in a recession in asset prices. And so everybody's market, you look at the market, you see the Dow is down, the NASDAQ, tech, consumer discretionary. There's, I mean, almost every area, you know, including some asset classes that you wouldn't think would be down, some non-correlated assets traditionally, metals, crypto, all these things that you would think would be like
Pretty much everything except the dollar.
pretty much everything except the dollar. And the only reason the dollar is higher is because it's the nicest house in a terrible neighborhood.
So, you know, in this kind of environment, we're seeing a pullback in the equities markets. Correct me if I'm wrong, but a lot of times the mining sector will be, you know, right there at the top of the heap to jettison, you know, as the market goes down. Is that what you're seeing this time around, or are mining stocks being sold with the rest? Are they being sold more so or less so?
Well, they are being sold with the rest, in some ways more so, and that's not unusual because they are inherently volatile anyway. So if you look at the gold sector, you know, last week or 10 days ago, there were people who had, you know, good gains in Barrick and Newmont and so on. So those are stocks you sell. Let's sell them while we still can, look in the profit. So yeah, no question that the gold stocks are being sold with the rest of the market. What typically happens, or what frequently happens, is that the gold stocks will fall with the market, but they will recover much sooner and much faster than the rest of the market. We saw this in 2020 with the COVID thing. We saw this in 2008. The XAU index of senior gold stocks, the XAU had already regained its pre-Lehman market crash by the beginning of March 2009, when the S&P was continuing to go down. So stocks had already recovered. Then you go back to 1987, same thing.
Another question for you. And part of this is just your outlook. I know you as a friend. You're always so positive, you know, off camera, on camera, behind the scenes, whatever. In your investing outlook, you're always very positive. You're not looking for the carnage. You're looking for the bright, shining future, right? So, in this environment, you're still as positive?
Well, my basic zeitgeist in life is still positive. Definitely, they have to be, because there's too many things to be positive about. There's companies that are making money. There's technologies that are doing well. There's needs out there that are being fulfilled by entrepreneurs. It's always going to be the case. Now, is it as easy to find the best companies now as it was 2 years ago?
Just listen to your presentation.
Okay, there you go. It's
right now.
more difficult. We're in a more difficult environment. We're in an environment where you have to be much more selective. We're in an environment where you need to have those earnings, you need to have the price performance, and you need to have good news behind you, like that's driving you forward. Because a lot of companies now, they're making a ton of money, but the price is not reacting. And so you might say, well, hey, how come this company, they just blew out earnings? Why are people selling it off? It's because of the sentiment. You know, so you have to be much more selective these days, and it's a lot harder to find the best stocks out there. You still can be positive. You there's still plenty of good opportunities.
So given the carnage that's going on currently in the stock market, how are the mining stocks handling that? You know, are they getting sold with the rest, or are they pulling out because people are looking to gold?
Yeah, they're not doing well right now in the short term.
I've never liked that thing.
What we've been seeing over the past few days has been the liquidity event. No prisoners are taken. Everybody has to sell everything. Yeah, exactly. So prior to that, gold is actually going well because a rising interest rate environment or a Fed rate hike environment is actually good for gold. As you just mentioned, over the last 4 Fed rate hike campaigns, gold has outperformed all the other major asset classes and actually risen in value. During the last Fed rate hike campaign that began in 2015, Fed instituted 9 rate hikes at 9 meetings, and 7 of those gold performed well immediately after those rate hikes. So that's kind of a misconception in the markets these days that rate hikes are not what they actually are. Because the market is, or speculators are anticipating what the next headline is, and that's the with the Fed being proven powerless or having to resort to these easy money policies again. I think that's what we're going to see at some point. I thought in the next couple of years. Now I'm thinking it may happen in the next couple of years.
Do you think gold is worthwhile to purchase now?
Oh, yeah.
And if so, do you know of any good deals?
Oh, gee, other than the one that's sitting next to me, you know, this is one of the reasons why you and I have been great friends. Is because you guys approach gold like I approach investment. It is a necessary thing to own, but you do it prudently and you do it as part of an overall investment strategy. You've always told the truth. You've always been above board. Yeah, but you've always been above board with your customers, and that puts you head and shoulders above the competition. So when we go forward, owning gold is not about the fact that it's going to go to $5,000 an ounce, $10,000 an ounce. Because if it goes to $10,000 an ounce,
We have bigger problems.
we're going to have a lot bigger things to worry about than you and I sitting
tell
here
people,
making a film.
take your small allocation, 5-10%, whatever it is,
Oh, yeah.
to gold, and hope that it does nothing.
Doesn't.
So
Yeah.
90% of your portfolio is taken off to the side.
Right, right. And that's the thing. So do I think gold's necessary? Absolutely. Do I think it's critical to own? Absolutely. But not for all the reasons you see on late night television commercials. What you want to do is own gold because it helps you stabilize the rest of your portfolio.
Well, Jim, I just want to say thanks for stopping by. I know you're incredibly busy at these shows, but there you have it from the Money Show. My good friend
My
Jim
pleasure.
Woods.
Thank you.
And thank you for joining us and listening in.
Thank you.
Thanks, everybody. Thanks, dude. Much appreciated.
Nope. Adrian, thank you so much for stopping by. I hope you have a great Money Show.
Thank you. Thank you.
Brian, thanks for stopping by. I really appreciate
Thank you,
it.
Rich. Always a pleasure. See you there.
Great.